Hey guys, welcome back. In this week's review, we're going to look at SoFi that's going to be merging with IPOE. This is Chamath's latest SPAC, and can you guys feel the hype rising over the past few days? I do think this is going to be the next big blockbuster SPAC that everyone talks about, but now we have to look under the hood and see if it's going to actually be a good investment, or is it all hype? And can Chamath redeem himself after the last disaster that what IPOC, which to me was a real embarrassment for him. So let's get started. Please like and subscribe. You guys know it really helps. And SoFi actually has a lot of good offers. So if you deposit $500 in their money account, you get $50 bonus, and so do I as an affiliate. If you deposit $1,000 in the investment account, then you get a $50 in stocks. And then if you refinance your student loans, you get $300. So if you're interested in checking out the products, right, if you're going to be investing in the company anyway, might as well check their products. I have the link in the description and also in the first comments. So now let's get started with the review. Alright guys, let's dive right in. So what is SoFi for those of you not familiar, and what are some of the basics of the transaction? Well, SoFi, it is extremely important to understand, is not a chartered bank. So it's not like Chase, it's not like Wells Fargo, it's not like one of your traditional banks. They act a little bit more like PayPal, right? So if you open a SoFi money account, you're depositing money into the account, which you can use like any other bank, except what they do is they take your money and they deposit it in their own bank. So what I did is I looked it up. Your money is still going to be FDIC insured. I feel like this is extremely important to take into consideration because this is a private company, right? If it failed, right, you want to make sure that your money is safe. So apparently from everything I've read, your money is going to be protected. Now, what other products do they have? They started off with the student loan refinancing, but now they've added so many more programs. And this is the strength of the company. It is very different from, let's say, United Wholesale. All they do is retail mortgages. Or if you look at PayPal, all they do is payment processing. Well, this company does literally everything, and that's why the company has so much potential. I mean, I'm very critical usually, but you have to give them credit. I have to give credit to Chamath for this one. This is the type of company that since they have their end in so many pots, they have a lot of different opportunities to make money. So there you have SoFi Invest, which you can use as a brokerage. There's the credit cards, the student loan refinancing, normal like personal loans. Then you have the mortgages that they're going to be doing. They're doing insurance. So there's a little bit for everyone. And this is what you need to understand is that once you're in the system, like customer acquisition for all these companies is the biggest like problem. That's what costs a lot of money for them, is advertising to acquire customers. Well, once you're in their system for one product, what they're going to do is upsell you and cross-sell you into other types of products. So you refinance your student loans. Now they're going to get you, they're going to try to make you like get a mortgage eventually when you buy a house and open an investment account with them. Right, so it's that cross-selling platform that is extremely powerful for this company. And for once, it's not a total exaggeration from Chamath when he says that this company is a little bit like the Amazon of personal finance and lending. You get to do a little bit of everything with this company. So if we look at the transaction itself, right, this is where we'll have to talk a lot more about it later in the valuation section, right? This is a very big transaction. They calculate it to be worth 8.65 billion transaction, right? But remember, this is at the IPO price of $10. So there's going to be 2.4 billion in cash that they're going to receive afterward, which a lot of it is going to fund the growth of this company in the future. But look at the pipe, 1.2 billion, which is higher than the money that the company is going to get from the shareholders of the SPAC, 805 million. So we'll look at that a little bit more in detail later on in the video. I've only had my account with SoFi for a few days now, so I can't yet comment on the quality of the service, but doesn't this girl look like she's happy to be with SoFi? In all seriousness, everyone I've talked to and all the research I've done show that people are very happy with their products and trust the company. And this is extremely important for the company's growth in the future, because let me ask you, do you guys like your bank? I have 6 accounts with 3 different banks. You know, I have my business account, personal account, I have my joint account, and I don't like them at all. I don't trust that they have my best interest, and I feel like all they want to do is take advantage of me. Whether I use the accounts or not, they're always charging fees. So I'm sure you feel the same way, and that's why people now, especially the younger generation, are trying to find alternatives. People open an account with SoFi. People deposit money in their Robinhood account, in PayPal, right? So that's what this company is banking on, is the fact that you're looking for an alternative and they're going to make it very easy for you to open an account and then use all the other services with it, right? Because you're not going to open this account and then like never look at the company again. You'll look at what they have to offer with the mortgages, right? You'll check your rates. You're going to look at what their insurance is. And that's what they're going to do, is lower their cost of acquisition for the customers that way. So 65% of the home loans that they did in the third quarter of 2020, right, were from existing customers that they didn't have to spend on advertisement for. Again, this is what the company is going for, right? Is that integration of all the services. And this is going to be extremely powerful in the future. Before I get into the revenue projections and the valuation, we need to talk about another component of the business that is going to be extremely important in the future. That is the technology platform Galileo. Right now, most reviewers are totally like missing the ball by not looking into it, and I think it's a big mistake. Most people are focusing on the lending platform and the financial services, right? This is the front end, the retail customer-based products. That's what's most obvious about the company. But when Chamath talks about it like the Amazon of fintech, he's not really looking at those. Yes, of course, they're going to be like a crucial part of the business and they're going to generate most of the revenues and profits. But really, it's all based on the infrastructure that they're building through the technology platform. Now, if you look at how Amazon was built, right? Yes, they have this web portal that you can go to and you can buy items. This is their main revenue driver. But really, this entire system is built on the thousands, if not tens of thousands of servers that they have across the world, which is called Amazon Web Services. And they let other developers, other companies, build their application and software on top of that infrastructure. So really, you have other companies pay for the infrastructure that Amazon needs to run their own like a product, which is their web portal. That's why Amazon is so successful, because other companies are actually paying for their costs. So online stores generate $163 billion for Amazon, but look at how much is generated from the web services. $40 billion, 12.4% of the company, which is in the back end. You'd never see that really, unless you're a developer. So that is one thing that SoFi is doing right now, which not a lot of people are looking into, is that in 2020, they purchased Galileo Financial Technologies for $1.2 billion, and everything is integrated onto the technology platform that they're letting other developers use. So when Robinhood and other companies like Monzo, Revolut, Chime, TransferWise, Varo, I don't know all of them, right? But they all have the same type of products that they offer. Well, they're all built on SoFi's platform. So in the end, all of that money comes back to you as a shareholder of SoFi. And this is why this is another part of the business that is so strong, is that no matter who ends up winning in that race, right, to attract customers for these services, all the money comes back to SoFi through Galileo. All right, guys, let's look at the unit economics and how they're going to make money off of the customers that they actually acquire. And now they have almost an unfair advantage over their competitors. So when you open a money account with the company and you get that $50 in bonus, link in the description if you want to try it out. The company is not going to make a lot of money off of you, right? They're only going to generate $250 in revenue over 5 years, which after their expenses, they give you a bonus and all of that, they're only going to generate about $85 in profit. So this is not like the big revenue driver for the company, and that's not what makes them worth billions of dollars. At $85 per person, like you can't really build a business off of that. So this is called a loss leader in the industry, right? So a loss leader is making people enter the funnel. The goal here is not to make profit, but it's really to like either break even, or even if you lose a little bit of money, it doesn't really matter, because what you're trying to do is lower the cost of advertisement and then make money off of the additional services. So let's say that you open a personal loan with another company, right? Let's say that they make $2,000 in revenues. Well, after all the expenses, like the advertisement and for them to actually deliver on the service, they're only going to make $938 in profit. That's a great margin of 45%. But what SoFi does is, since you're already in that funnel, right, they'll be able to give you very good rates, give you favorable terms, incentivize you to take advantage of their other products, like beat the competitors by lowering all the fees and everything, because they don't have all of those expenses. They already have you in their database. So they'll make $1,763, which is an 86% profit margin on those services. And that's why they have an unfair advantage. Once you're in the funnel, right, you're like a cash cow. I say that positively, not negatively. They will be able to milk their customers for all they're worth, and you as a shareholder, you're benefiting from that. Let's look at some growth numbers, shall we? So the company for a while was not growing that rapidly, but now with all of the changes that they implemented and all of the new programs, plus now they're focusing on customer acquisition, the company is gaining speed very rapidly, right? So at the end of 2020, they had 1.7 million members, and they think that they can grow this to 3 million by the end of 2021. So that would be a 75% increase year over year. That would be a very, very significant increase. I opened an account last week. I'm sure you guys will too, if you haven't already. And, you know, with the attention that the SPAC is going to get, that's going to put a big spotlight on the company and attract a lot of new eyes on it, and potentially people are going to open accounts. So if we look at the technology platform Galileo, I mentioned before, I think this is going to be very crucial for their growth in the future and really improve their bottom line. They opened 25 accounts in 3 quarters from the end of Q4 2019 to Q3 2020. So all these companies are plugging into the infrastructure and creating accounts, and that's going to help with the growth of SoFi in the future. Now, everyone knows that this company is doing very well. This is CNBC's disruptor list. SoFi is number 8 on the list, right? Just for fun, the number 1 is Stripe. So when Stripe becomes a SPAC, if it ever does, you guys pounce on it, it's going to be very popular. But anyway, what I was going to say is that everyone knows that the company is doing very well and they're a disruptor in the industry. So you can expect that there's a lot of money that is going to be poured into this company over the next year, right? Not just from retail investors like us that can buy a few thousand shares. We're probably going to see big hedge funds opening big positions. You guys know what happened with IPOE when ARK Invest started to buy into it, right? Open door, everyone started to buy into it and really blew up the valuation for it. It's very possible the same thing's going to happen here. If we look at the actual revenue, in 2020, they are at 621 million. And then their goal by 2025 is to grow to 3.6 billion. Now, of course, over time, the growth rate is going to slow down, because the bigger they are, the more difficult it is going to be to grow. There's only so many accounts that can be created unless you're Wells Fargo. So the thing is that even then in 2025, that would be a 31% year over year growth, which is huge, right? Compared to any of the other companies in the S&P 500. There are very, very few companies that can grow this much. If we look at the adjusted EBITDA, which is closer to profits, they would get a small positive EBITDA in 2021, so this year. And then over the next few years, that's when their margin is going to improve, right? They want to go from 26% this year to 45% in 2025, which would bring their revenue almost to 1.2 billion. The EBITDA rather. All right, guys, we're almost done with the video. Now we have to get into the valuation, and this is the elephant in the room. We have to talk about it. I feel like I made a pretty good job at explaining why I think the company is going to grow and do very well. But you can't deny that the valuation is fairly high, right? We have to make a lot of assumptions on the company's growth and success in the future to reach this valuation, because the share price has already almost doubled. So as of me filming this, the share price is at 18.74, right? So it's ran up a lot already. And this gives the company a valuation of 16.2 billion. Remember, Chamath underwrote it at 8.6 billion. So this is why you have to really be positive about the future growth of the company, and you are paying a big premium on it. If we look at some of the numbers that he has in his one-pager that he always publishes on Twitter, currently the valuation is 6.7x the 2021 estimated revenue. Remember, this is doubled now, so we're at 13x. Then 1.8x the 2025 estimated revenue, double that to about 3.5. And then 13.6 P ratio for 2025, double that to 25. So as you guys can see, you are paying now for a lot of revenues in the future, and you have to agree with the thesis if you think that this is a good price. I think it's okay because of all the factors I talked about before, right? And I'll explain it a little bit more in detail in a second, but do keep in mind that the company is not cheap right now by any means. All right, guys, in the wrap up, what do I think about the company? How am I going to be playing it? And does it get my seal of approval? Well, I have to say that this company to me redeems Chamath. I've been very critical of him in the past, but this is very different. I have to give credit where credit is due. This is not IPOC Clover Health, which I thought was a disgrace. This company has a very strong base, lots of potential. I mean, they can just create new products and upsell them to their existing customers and get more customers in the future. I'm very interested in this company. It gets my seal of approval. I am going to invest in it. Now, the question is how to invest in it. So right now, the share price is at 1874, and I do think that it's going to go up, both in short term and long term. So for this one, I would rather buy now, and if for some reason it actually goes down, then I can just average cost down instead of crossing my fingers that, it retraces to, let's say, $15. I do think that the stock might retrace because, I mean, the valuation is fairly high, but I would rather just average cost down than risk seeing it this week at like 25 or something like that. So that's how I'm going to be playing it. And the reason why I'm so confident about this one is that, yeah, the fundamentals of the company are very good. It has all the tools, all the ingredients to become the Amazon of fintech. But we are in a world where Airbnb is at $150. I made a video about Airbnb talking about the IPO price of $60. All the other YouTubers that covered this stock thought that it was going to IPO at that price, and then maybe by the end of the trading day it would be at 80 or something like that. But no one anticipated that it was going to be 150. Like, that is completely wild. Same for DoorDash. DoorDash IPO is most ridiculous of 2020 and holds no value. And still, the valuation is crazy high. So this is the world we live in right now. Hedge funds are desperate to invest their money. Right? A lot of them missed the big run-up after March, so now they're desperate to invest in anything they can. And that's why I think that this company is going to really benefit from that, even with the current valuation that is very, very high. Valuation doesn't even matter anymore. People only look at the share price. So with all that said, this is how I'm going to be playing it. Let me know in the comments what you guys think. Quick reminder, self-interest, sorry. There is a pretty good bonus if you sign up for their money account or any of the other services that they provide. Links are in the description. Let me know what you guys end up doing, and I'll see you guys in the next video.